Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar has taken a bruising session on Tuesday and on Wednesday following the interest rate decision by the RBA. And along with that, the market finally got the update for the GDP as well, which came in on forecast at 0.9%. As widely expected, the RBA lifted rates on Tuesday for the fifth consecutive time, and it was 50 basis points that saw the rise to 2.35%, which is the fastest series of hikes since 1994. The last time the Australian cash rate was at this high was back in December 2014, when it sat at 2.5%. Following the rate decision, the RBA Governor Phil Lowe said in his statement that the board would stay committed to its goal of reducing inflation to the ideal range of 2 to 3%. Along with that, inflation figures in December are viewed or poised for a peak around 7.75. Looking ahead, we've still got the RBA Governor to speak on Thursday, and also we do have Fed Powell as well. Looking at the current market, the market is destined for a challenge of 66.80. Now, with the trend quite strong, could see this level crumble, and if so, would expose the region towards 65.70. So keep an eye on that. We are oversold though, so let's see if the market can respond like it did back in early July, when it rebounded quite aggressively from the 66.80 level. With eyes looking towards the ECB rate decision on Thursday, it is widely expected that the market may see a 75 base point rate hike. That is from 0.5 to 1.25%. Looking at the technicals though, with the dollar index, which measures the greenback strength against the basket of six major currencies, has refreshed its 20-year highs. That is around 110.58. We can see that the pressure is still remaining on the euro at 98.80. Now, a break or a New York close beneath this tomorrow morning would give further indication for a bearish case and look towards 96.35.70 as initial target. But we are oversold. Nevertheless, the bears have continued to weigh on this support as the US dollar has strengthened. While the market's surging for dollar yen, as it now looks towards 146 as a potential target. Currently trading around 144. We've still got levels towards 144.55, then 146. And also along with this, trading at highs last seen 24 years ago. Around that time, we did see the Bank of Japan intervene. No doubt they are looking at market levels and therefore could intervene anytime soon. The other factor is that due to the widening gap on the monetary policy between the Bank of Japan and the US Federal Reserve has put a lot of weight on yen weakness, and therefore this is partly most of the reason why we're seeing this rally. Well, with the announcement that the UK Prime Minister Liz Truss is now confirmed, pound did find brief strength, but now looking for a further weaker play into Wednesday's session. And with this hammer nearly mostly negated, could see further weakness, but we are oversold. Looking at the current pattern though, let's see how the market responds at the level of 114.5. If we fail to get any response from there, then we could be looking back towards this bottom side that I recently called around 111 to 113 and reassess. Looking at gold, well, the market is still remaining quite heavy after the rejection of that 1,719 level. Has put the market back on focus to 1,680. A break there with the dollar weighing mostly on gold due to its recent rally. Could see a break and look towards 1,635 to 42 as a potential target. It would seem that the market has got all jittery over the recent demand fears as China lockdowns increase. Looking at the current pattern, we've broken 86 and it's now exposed the region of 82.60.90, with the technicals also weighing quite heavily after the rejection of the midway point and a trend coming to a bear case. Could actually see further losses and stop losses being triggered as we're taking out this 86 level. Well, that wraps it for today. Thank you very much for joining me, and as always, look after the intraday report. I hope you enjoy the rest of the day.